Jai Hind friends. If you are new to this channel, please hit the subscribe button so that you can get regular update whenever a new video is uploaded. And in case you like the video, please do hit the like button. It will help the video reach more and more audience and more people can benefit from the video. So let's start with the investor. An investor has not wasted time at all. He has come directly to the point and he has asked me to review the portfolio. And we will also not waste much time. So let's start. Invested amount is 1,98,000, current value is 2 lakh rupees, and currently there is a profit of 6,000 rupees, which is equivalent to 3%, and the number of holdings are 15. So let's review the companies first, and then we'll discuss on whether we should have 15 companies in this portfolio or not. First company is Alkyl Amine. Invested amount is 13,000 rupees, and currently there is a loss of 3%. This is a company from the chemical sector, and this company is the leader in aliphatic amines. It's a good company, you can continue. Next company is Asian Paint. Invested amount is 42,000. Quantity invested is 15, and currently there is a loss of 1%. This again is a leader from the paint sector. This is a consistent compounder company which keeps increasing your wealth consistently over the period of 3, 5, 10 years. So over the period of 3, 5 and 10 years, you will generally see that this company has given a return of close to 20%. Right now there may be some dip because from the past 1.5 years, the company is facing pressure. And we know the reason. The reason have been the Russia-Ukraine war, high inflation, high crude oil prices. So because of all that, this company is currently under pressure. But these are all temporary issues. These issues have been there previously also. And this company has successfully handled them also. So we can continue with this company. And this company is also now foraying into the home decor segment, which is even bigger than the paint sector. So if this company is able to do what it has done in paint sector in the home decor also, then we might see exponential growth in this company. But obviously that is going to take time. Next company is Bajaj Finance. Invested amount is 29,000. Quantity is 5. Currently there is a profit of 9%. This is a good company from the NBFC sector. It's the leader in the NBFC sector. Although it is a very big company right now with a market cap of close to 3 lakh crores. But the growth is still there. The company is still growing at a very good rate. So this company can also give you good return in the coming future. Next company is Bank of Baroda. And invested amount is 3,500. Quantity is 19. Currently there is a loss of 9%. So now I'm at the chart for Bank of Baroda and I'm at the maximum chart pattern of the company, and you can see that this company has given just 600% return in the period of almost 25 years. So with this you can just figure out how much return it is going to make for you also if you stay invested in this company. In between, these PSU banks go up, but soon they fall, and then again they go up, then again fall, again it is going up, and again I think these PSU bank will start falling. So according to me, there is no point investing in PSU banks. If you want to invest in banks, try to only go with private sector banks, HDFC, ICICI or Kotak Bank. These banks are increasing their profit at a rate of 20%. They may not have performed in the last couple of years, but when the next bull run or the next rally will come, you will see the stock covering up for the dull time. Because nothing wrong has happened to their fundamental, but their stock price is not moving. And generally when this happens and when the share will start moving up, it will cover up for all the 2-3 years of dull period. So I think you must have understood now that I would not have gone with Bank of Baroda or for that matter any PSU bank. Right now everyone is loving PSU banks because of the recent rally that they showed, but now you must have seen what has started happening again. So these banks will hardly make you money consistently. The only way you can make money from PSU bank is when you are able to time them. If you are able to buy them before the rally, then you'll make good money. Otherwise you can just leave it. There are better companies available in share market. Next company is Polycab. Quantity is 10. Invested amount is 27,000. Currently there is a profit of 8%. So this is a good company. This is a market leader in the wires and cable sector, and this company has not completed 5 years yet, but this company is growing at a very healthy rate, and till now this has also provided very good return. So if you want, you can pull more money and put it into this company, but not when this company is at its peak. Try to invest only when it comes down to its support and provide you a decent discount. Next company is R Power. Quantity is 2. Invested amount is 28 rupees, and currently there is a loss of 18%. Guys, this type of company you should always avoid. You have invested 28 rupees, but that also does not make sense because it is not going to help you in any way. Even if this shares becomes 100 times, then also you're just going to get 2800 rupees. And the probability of this share going 100 times is 0.000000001%. So I would suggest do not waste time in investing in this type of company. But let's review this company so that you guys know what are the type of companies you should avoid. So now I'm at the chart pattern for Reliance Power, and if you look at the maximum chart pattern, you will see a completely opposite chart pattern to what we discuss on the channel. We discuss that we should invest in companies whose chart pattern is going from bottom left to top right, but for this company it is completely in this way. So these are the type of company that you need to avoid completely. So this is one very important check. If you apply this check on all the companies that you think of investing, then this check can help you filtering out a lot of bad companies. And now I'm in the yearly result for this company, and in this company we will not look at the operating profit, we will look at the profit before tax. And the reason is because we have to consider this portion, which is interest, which is basically the reason for their downfall. You can see how much interest this company has to pay, and the reason why they have to pay so much interest is because they have taken too much of loan. And here you can see the borrowings or the loans that they have taken. You can see 25,000 crores, 23, so it's in the figure of 20,000 crores, and the market cap of the company itself is just 3,000 crores. Now let's come back and let's look at the profit for this company. You can see for the 12 trailing month is in negative 1,000, then last year also negative, before that it was in positive. And you will see these kind of numbers in this company, because whenever they'll show these type of numbers, then only the retail investor will get excited and will start coming into Reliance Power, because they'll think now the company is giving a turnaround, so they'll start investing in this company. But these are all tricks and trade. Please do not fall into these kind of traps. So this is a second check that you should do in a company before buying it. Check whether the company is making profit, and check whether the company is consistently making profit and increasing the profit. And third thing that you can check is the shareholding pattern. And there is something very amazing happening in the shareholding pattern. So you'll see that in December 20 and 21, promoters holding were just 9%, and the public holding you can see was 83%. So whenever you see public holding more than the promoter holding, then there is some problem. So this is also one indication. But right now you'll see that the promoter holding has increased, and it has now increased to 25%. You can see that there is a stake of FIs also around 7.5%. And if I open up FIIs, I do not see any FIIs who is currently there in December or January quarter. So we do not know what type of FIIs these are. And with the increase in the promoter holding and FIs holding, DIs holding, one famous dialogue is coming to my mind right now, which is Daya, kuch to gadbad hai. I think there is something fishy going on. Maybe they are trying to attract the public by showing them that promoters holding, FIs, DIs holding are increasing, so something great is going to happen in this company. So my opinion will be stay away. There is no power in Reliance Power, and do not invest even 20 rupees in this share. But these are all my views. In case you still want to invest, please do your own study and then invest in the company. Next company is Tata Chemical. Quantity is 7, invested amount is 5,000. Currently there is a profit of 28%. This also is a okay company, not a great company to have in the portfolio. There are better chemical companies that you can look at, which are growing at a faster rate than Tata Chemical, and which are market leaders and have some kind of competitive advantage. Companies like Deepak Nitrate, Fine Organics, Vinity Organics, these are the type of company you can look at. Next company is TCS. Quantity is 3, invested amount is 9,700. Currently there is a profit of 9%. This is a good company. This is a portfolio company. You can definitely stay with this. This is a market leader in the IT sector, and this company can continue to grow your money in the coming future also. It may not be able to grow it by a 40-50% CAGR, but it can give you around 15 to 20% CAGR easily without any tension and without making you lose your sleep. Next company is Union Bank. Quantity is 10, invested amount is 800 rupees. Currently there is a loss of 8%. This again is a PSU bank, and I do not like PSU bank, so I cannot say anything good about PSU bank. So if you think there is something good, you can stay invested with PSU banks. Next company is Canara Bank. Quantity is 30, invested amount is 10,000. Currently there is a loss of 12%. So again a PSU bank. Please do a copy paste of my comment regarding Union Bank to Canara Bank also. Next company is HDFC Bank. Quantity is 15, invested amount is 23,000. Currently there is a profit of 4%. This company is excellent. This is a private sector bank and a leader in the private sector bank. You can definitely stay with this company, and if you want you can add more of this company also. Next company is ICICI Bank. Quantity is 30, invested amount is 26,000. This also is a good bank. If you want you can continue, but in my opinion you should go with either of the three bank. Either go with HDFC or ICICI or Kotak. So out of these two, if you have more conviction on HDFC, then maybe you can exit from ICICI and then put your money back into HDFC Bank. Next he has is a ETF, Mafeng. Quantity is 107, invested amount is 3,900, and currently there is a profit of 25%. With this, if you want you can continue. There is nothing wrong with this. So for those who do not know, this ETF covers 10 companies of US, which includes Facebook, Amazon, Netflix, Nvidia Corporation, Tesla, Advanced Micro, Snowflake, Alphabet, which is Google, Apple, and Microsoft. So this also is a good ETF. In case somebody wants to invest in US IT companies, they can invest in this ETF and take benefit of it. Next company is National Aluminium. Quantity is 10, invested amount is 800 rupees. There is a loss of 5%. In my opinion, I don't think we should invest in this company. This is a company from the metal sector, and metal sector is very cyclical. It's very difficult to make money in the metal sector. Next company is PNB, again a PSU bank, quantity is 13, investor amount is 749. Again do a copy paste on this one also. So this brings us to the end of the portfolio review, and I have given my opinion on the companies. Once again a disclaimer, these are my views. Please do your own research and study also before you take any buying or selling decision, because ultimately the profit will be yours, the loss will be yours because it's your money. But now coming back to the holdings and the portfolio size. The portfolio size is currently close to 2 lakh rupees and the holdings are 15. And with this portfolio size, having 15 companies in the portfolio does not make much sense according to me. I think with a portfolio size of 2 lakh rupees, you should have maximum 6 companies. I'm saying maximum, but minimum you should have 3. So between 3 to 6 you can decide. And out of these 3 to 6 companies, decide maximum good companies, market leader companies. For example, Asian Paint, Bajaj Finance, which you already have in your portfolio. For example, SDFC, which you already have. You have TCS, which is also good. You have Polycab, which is also good. So out of these companies, if you want, you can select maybe top 3 or top 5 or top 6 and then put your money in these companies. And whenever you get opportunity in these companies, whenever these companies are down by 15-20%, then you can add more of your capital into this company. And as and when your portfolio start increasing, then you can think of adding more and more companies, but do thorough study before you take any investing decision. Do check the chart pattern, do check whether the company is making profit or not. Also check whether the profit sales are increasing at a good percentage or not, because ultimately the share price follows the earning growth of the company. So unless the company is growing its profit, the share price will also hardly grow. So I hope this video was helpful. I wish you all the best in your investing journey. Stay invested. Thank you.